9 years ago, the U.S. economy sank into a recession, the housing market crashed, and credit markets seized, bringing the banking industry to its knees. Businesses were going down. Workers were losing jobs. Americans were losing hope. For many, the psychologically critical low moment was the Lehman Brothers bankruptcy on September 15, 2008. But the memory of events before and after that day is slowly fading. Business Insider outlined the 27 major moments, from 2007 to 2009, and added some context. From the initial reports of subprime defaults to AIG's second bailout, here are the scariest moments of the financial crisis. Stephen Perlberg contributed reporting. February 8, 2007, HSBC says its bad debt provisions for 2006 will be 20% higher than expected because of a slump in the U.S. housing market. Non-finance people start paying attention to what subprime is. Flickr It is clear that the level of loan impairment provisions to be accounted for as at the end of 2006 in respect of mortgage services operations will be higher than is reflected in current market estimates, HSBC said in a statement. Celestial Asia Securities Director, Kitty Chan, told the BBC, "This is something which surprised the market, providing investors with a reason to sell quickly." Source: HSBC, April 2, 2007, New Century, which was the largest subprime lender in the U.S., files for bankruptcy. Damien Doe Vargans/Ape In early May 2007, New Century said it had failed to receive bids for its mortgage loan origination business, forcing it to shut down the unit and lay off 2,000 employees, AP said. Source: SEC filing, AP June 21, 2007, Merrill Lynch sells off assets in two Bear Stearns hedge funds as they hemorrhage billions of dollars on bad subprime bets. Louis Lonzano/Ape In the above photo, federal agents leave 26 Federal Plaza with handcuffed former Bear Stearns hedge fund manager Matthew Tannen, Thursday, June 19, 2008. In New York. Tannen and ex-manager Ralph Chaffee were both accused of securities fraud in the wake of the collapse of the subprime mortgage market, which foreshadowed Bear Stearns' own demise. They were found not guilty in federal court in 2009. Source: Reuters, AP, New York Times August 9, 2007, BNP Paribas, France's largest bank, freezes withdrawals from 3 investment funds after U.S. subprime mortgage losses hit markets, reviving credit market concerns. Remy de la Mauvaneer AP The complete evaporation of liquidity in certain market segments of the U.S. securitization market has made it impossible to value certain assets fairly regardless of their quality or credit rating, BNP Paribas said. BNP Paribas Investment Partners has decided to temporarily suspend the calculation of the net asset value as well as subscriptions/redemptions, in strict compliance with regulations, for these funds. Source: Reuters, AP September 4, 2007, LIBOR, the interbank interest rate, hits 6.7975%. That was the highest level since December 1998. Jonathan Ernst/Reuters One day later, on September 5, 2007, the hearing of the House Financial Services Committee, pictured above, addressed why a crisis originating from risky loans to less credit-worthy buyers happened. A senior Treasury official told Reuters that day that although turmoil in credit and mortgage markets was far from over, the U.S. economy wouldn't fall into recession. Then U.S. Comptroller of the Currency John C. Dugan, in the center of the photo, said, "The national banking system remains safe and sound." Source: BBC, Reuters, Office of the Comptroller of the Currency October 24, 2007, Merrill Lynch announces an $8.4 billion quarterly loss, the largest in its history, thanks to write-downs on subprime mortgages. Charles Rex Arbogast/AP stocks sold off the morning after Merrill Lynch's announcement. They then continued falling after the National Association of Realtors said existing home sales fell to the slowest pace on record and the median home price fell 4.2% year-over-year in September. Ultimately, The Dow finished flat and the S&P 500 closed down by 0.2% after a rally late in the day. The Nasdaq finished down about 0.9%. The above photo shows Kenneth M. Mrowiak in the Standard & Poor's 500 options pit at the Chicago Mercantile Exchange after the close that day. Source: AP, CNN Money. October 31, 2007, Meredith Whitney says Citigroup will have to cut its dividend. Later, the firm does. CPIC. Source: CPIC, Bloomberg. October to November 2007. Many CEOs would not hold their posts through the financial crisis. Merrill's Stan O'Neill and Citigroup's Chuck Prince both exited, taking monster severance packages with them. O'Neill, the second highest paid Wall Street CEO in 2006, left with $161.5 million 1 week after the bank reported the largest ever quarterly loss. Seth Wenig/AP. Source: AP via NBC News. December 11, 2007, the Fed cuts rates by 25 basis points to 4.25% and cuts the primary credit rate to 4.75%. Richard Drew. AP incoming information suggests the